Welcome back to the show. To get his take on the state of the U.S. economy, Peter Schiff is with us. Peter is the CEO of Euro-Pacific Capital, also the host of the Peter Schiff Show. We've talked to a lot of people recently on the show who believe the U.S. is headed towards a recession in the near future. But Peter is one of the few people who thinks we are already there. We are already in a recession. Assuming that's true, I first asked him when it started and what triggered it. Here's what he had to say.
Well, I think what triggered it was what caused the artificial boom in the first place. You know, you had a former Fed FOMC member, Fisher, on television earlier today admitting that the Fed injected the markets and the economy with heroin and cocaine. I mean, these are not good things. The fact that the Fed acknowledges that that's what they used. I mean, I was calling it monetary heroin in the beginning because I knew that the hangover would be horrific. And that's exactly where we are now. The Fed has tried to take away the monetary heroin, and now there is withdrawal, and we're in recession. And I think it officially began last year, although the government hasn't acknowledged this yet, which is generally the way it is. Usually the government doesn't admit you're in a recession until it's almost over.
Yeah, I wanted to ask you about that. Why is that? Why is it that we can't determine that we're in a recession in current time, or can we determine it, but we're just not acknowledging it?
Well, because a lot of the statistics are compiled by people that have a bias. And so a lot of the numbers reflect the bias that exists that the economy is growing. It isn't until hindsight that they can go back and correct the errors that resulted from their own bias. And even if, let's say, the Fed believes that there's a recession, the last thing they want to do is admit it because they're hoping to talk the economy out of it. They're hoping to create a bunch of false optimism and maybe will the recession away. And so once it's too late, eventually they go back and admit what they should have acknowledged, but they were too afraid to earlier.
Something tells me it's going to be hard to talk their ways out of this one. Let's talk about the jobs report because it certainly looked strong in comparison to what we saw in January. After January's initial report of 151,000 jobs added, economists began getting a little nervous and started raising their estimates of the risk for a recession. But now we have a revision on January to 172,000 jobs plus. We have the 242,000 that were added in February. Can we be in a recession and be adding an average of 200,000 jobs every month?
Well, absolutely. When all you're adding is part-time jobs, 88% of those jobs were part-time jobs. Full-time jobs are being lost, especially the higher paying ones in manufacturing. We lost, I think, 16,000 of those last month. 80% of these jobs that we created, not only are they part-time, but they're low wage. A lot of them are minimum wage. They're all in the service sector. And so this is why we're in recession, because people are losing their good full-time, high-paying jobs, and they're replacing them with low-paying part-time jobs. That's why there's a recession. Look at the number that came out earlier today on wholesale inventories. They're exploding. The inventory to sales ratio is now the highest it's been since March of 2009, when we were in the Great Recession. If we're creating all these jobs, why don't people have the purchasing power to go out and spend? In fact, look at consumer credit that collapsed. We got those numbers yesterday. And also we found out that small business optimism just hit a new 2-year low. So if they're hiring all these people, why are they so pessimistic? So the reality is the jobs number was not strong. That's just the fiction that President Obama wants to peddle.
Well, every time we've had a recession, jobless claims have soared, and now they're down. In fact, they're at record lows. If the economy is contracting, why aren't we seeing it in jobless claims?
Well, we will. I mean, normally the jobless claims move up as the recession matures. So in the early stages of the recession, you can have low unemployment, but that is going to change. Look at the announced layoffs already for the first 2 months of this year. These are 20% ahead of where we were last year. But if you look at corporate earnings under pressure, look at retail sales collapsing, jobs are going to be the final thing to break. I mean, normally employers don't lay people off because they think a recession is coming. When they get surprised by a recession, that's when they start the layoffs. So I think the layoffs are going to come. They're going to come this year. And, you know, there's only so many part-time workers that American businesses are going to be able to hire. They're going to start laying them off sometime during this year. So you're going to start to see the unemployment rate move up. But by then, of course, we're going to be knee deep in this recession, maybe even neck deep.
Sounds like it's going to be quite a problem for the next person at the helm of the country, the next president. Wages certainly weren't good for the month. They fell by 1%. You say that reflects true weakness in the economy. But if that's the case, how do we explain January's very strong wage data, 0.5% growth, just a month earlier? Was that just a one-off?
Well, that's because, that's easy to explain, because a lot of states, about a dozen states, had big increases in their minimum wage that went into effect January 1st. And since so many Americans now work for the minimum wage, including heads of households and college graduates, that had a one-off effect. But, not only did wages drop 0.1% last month, which is the first drop in a couple of years. In fact, it's only had 6 drops in the last 10 years. But if you look at hours worked, which actually declined, if you look at weekly earnings, they actually plunged by 0.7. That is the biggest drop in weekly earnings since the government started keeping statistics. And I have no idea when that was, but it was probably before I was born.
Yeah, I mean, I was just going to ask you about that. Hours worked going from 34.6 to 34.4. Most people would look at that and say, doesn't really sound like that big of a drop. Talk to me a little bit more explain a little bit more about where that's really coming from.
Well, again, it's coming from more people working part-time instead of working full-time, or having their hours cut back. That's what's going on. And, this is why you've got the popularity of Donald Trump or Bernie Sanders. It's all the people that used to have full-time jobs that have now left the labor force or have a lousy part-time job. They are going to these rallies for Sanders or Trump. And, it's the angry white guy, white males. These are the ones that have had their jobs decimated during this so-called recovery. For a lot of people, this recovery has been worse than the recession that preceded it. In fact, most Americans today are poorer. They have lower incomes and less of a net worth than when this recovery started. And of course, since I'm saying that we're already in recession, if people thought that recovery was bad, wait till they see how bad this recession is, because our recovery was worse than most recessions.
So you think that this recession would be worse than what we saw in 2007, 2008?
Yes, I do. I think this recession, which started late last year, is going to continue throughout this year. Whoever succeeds Obama as president, whether it's Trump or Hillary Clinton, is going to inherit an even bigger recession than the one Obama inherited from Bush.